Hello everyone, let us start the discussion. New topic from the corporate issuers. Give the heading Capital Investments and Capital Allocation. Capital Investment and Capital Allocation means, first of all, let us understand that what the author wants to say with this. You have a capital, you have a capital of say $100. Okay, you have a capital of $100. Clear? Now, where you will invest this $100, because you know that you have five multiple projects open: project 1, project 2, project 3, project 4 and project 5. Clear? Project 1 having a demand of say $60, project 2 having the demand of $70, project 3 having the demand of $30, project 4 is having the demand of $40 and project 5 is having the demand of $100. Clear? So it is for sure that you cannot invest in all the projects. Clear? Because you have limited amount of capital. Clear? So what you can do? What are the options for you? Either you can invest in only in project 5, you can invest in the combination of project 1 and project 4, you can invest in the combination of project 2 and project 3, or suppose all projects are not beneficial, only P1 is beneficial, rest all are not beneficial, so you will invest only in P1, that is your project 1. So on what basis you will take the decision that in which project you should invest your money? And the reason, you have a limited capital. So this is the theme of the topic. So we are going to study over here multiple methods to identify that which project or which combination of project is best for you. Okay, the methods can be net present value. Okay, it can be IRR, that is internal rate of return. Clear? And return on investment capital. Clear? So this is how we will understand it. Now the first LOS which we have to discuss over here, give the heading, that is describe the types of capital investment. Describe the type of capital investment. Describe the type of capital investment. Clear? So we are going to study this portion first and then we will move ahead with the capital allocation. First of all, we will understand what is capital investments. Clear? Okay, so basically we are going to learn about four types of capital investments that company makes to actually manage, see the word manage, their funds, grow their funds and comply with the rules in the business. Clear? The purpose is three purpose. First, you have to manage your funds. You have to manage, or you can say manage your business, rather than I will use the word manage your business. You want to grow your business, and along with that you have to comply with all the rules and regulations set by the government, that how this business will be managed. Clear? So we will understand this portion with practical examples and practical concepts. Clear? Now imagine, okay, let us going directly into the business. Let us take a small example, day to day like example. Okay, means something which we see on a regular interval, like a person, okay, or a family, they need to spend a large amount of their income on the maintenance of their home. Clear? See, first of all, they have to manage their homes. Clear? Definitely they have to grow their home, they have to grow their business, they have to comply with the rules of the government, that how you have to build your home, what are the methods you have to follow, everything. Clear? In a similar way, you have a business where you want to manage it, you want to grow it, and the third is to comply with the rules and regulation. So over here, point number 1, give going concern projects. Going concern project. The projects which are going concern. Okay, basically the point is that why I am using the word going concern, whether this will continue for how long this business will continue. Clear? Means suppose there is a project and we know that this project is only for 2 years. So it's not a going concern. Clear? So I will invest my money into those projects which are a going concern. Clear? Which keeps on running the business smoothly forever, for infinity. I'll use the word going concern. Clear? Write down, write down. These are investments. These are investments a company makes. These are investments a company makes just to keep the business running smoothly. Just to keep the business running smoothly, like maintenance and small upgrades. Means try to understand that a business have so many things to do. First is to maintain all the prior business which they are doing. Clear? For that also they need the funds. Clear? New projects, new projects which they want to start, they need funds. Clear? R&D, to decide even what we will do in the future, you need funds, and you have only $100. So how you will invest your money, how you will allocate your money even in this way, where you will ensure that the business which you are doing, it will keep on running. New projects which are coming, you will invest the money so that you will make new profits, and then your money in the R&D, research and development. Clear? So first of all, your purpose is what? If you have $100, you want to invest your $100 in a way that you can ensure that at least whatever you are doing right now, you will be able to do it in future as well, so that your business will run smoothly, whether it requires a small upgrades or whether it is a maintenance. Clear? So going concern further divided into two parts. Write down. Number one, project to maintain the business. Project to maintain the business. Project to maintain the business. And second one is project to reduce cost, or improve efficiency. Clear? First one is to maintain the business. Okay, it's just like you are changing the oil in your car or repainting your house. Clear? So this will not make your money more, okay, but necessary to so that you can keep using your car, you can keep using your house. So this investment will not generate new money for you, but yes, this will ensure that whatever you are doing at present, it keeps on continuing. Because suppose you are using a car, okay, and you will not upgrade your engine oil, then car will stop at a point of time. So you need to change the oil in a regular interval. So this is like a maintenance of the ongoing project, Clear? Now suppose there is a machinery which I'm actually using to build, say, biscuits. Clear? But now this machine is way too old and it breaks down on a very frequent way. Clear? So if I am removing this machinery and bringing a new machinery, clear, do the same thing. Clear? This is also project to maintain the business. Clear? So this will not increase my revenue, but it will prevent the future breakdowns so that I will not lose my sales. Clear? Second is project to reduce the cost or improve efficiency. Clear? Now your company will spend on better technology, better machinery. Clear? Might be like you are using the machinery which is energy efficient. Okay, it will give you less electric bill, or might be the speed of the machinery is very good. It will, earlier it is used to, say, make only 100 packets of biscuit, but now they are making 1000 packets of biscuits. Clear? So you are spending money to become more efficient. Clear? So these are also necessary to improve the working of your business on a regular interval, and this can increase the profitability of the organization. Because you are becoming more efficient, your cost is reducing, and hence you are making more profit in the company. Now, we know that if I am buying some long-term assets, whether it is a machinery, vehicles or buildings, okay, so they won't last forever, okay, over time they wear out or become obsolete, clear? So there is a gradual loss in the value and we call it as a depreciation, clear? So if the machinery is worth 10 crores, clear, and let us assume that this machinery will last for 10 years, clear? That means what? Every year you are losing 1 crore value in that particular machinery and we call it as a depreciation in the financial statements, clear? So now if I am an analyst and I am looking at how much money a company need just to keep the business running, okay, rather than expanding, just to keep the business running. So what I'll do, I'll just go and check the annual depreciation expenses. This is a rough estimate, clear? So that will give me an idea that, okay, if a machinery is depreciating by 1 CR, then I need to add some value to it, clear? Or might be after 10 years, I need again 10 CR to replace that machinery, or on a regular interval I need to put the oiling, the change of the parts, and so many things are going simultaneously, clear? So if suppose let us take one example, company shows 50 lakh in depreciation this year, okay, that means what, you have used the machinery for up to 50 lakh rupees, clear? So now you need to invest this 50 lakh very soon so that you can maintain the operation, because your machinery have wear and tear by that 50 lakh rupees. So you need to invest it back so that you can use it at the same capacity, okay, whether it is the repairing or whether it is replacing or whether getting a new machinery, clear? So this is true for a going concern project where you need to ensure that whatever you are doing at present, you keep on running that. It's okay to think about the new projects, the future, the new machinery, but whatever is there in your hands, at least maintain that. So the first use case of the fund is to maintain the business which is going on, from where you are actually generating the real revenue, clear? Now there is another funda which we will discuss, that is a match funding. Match funding. Now what this match funding is, write down matching loan duration with project life. Matching loan duration with project life means if if the life of the project is say 10 years, clear, and the project cost is 10 cr, clear, then how much money you need, how much you need every year, clear? So let us suppose a company wants to buy a new machinery and machinery will cost say rupees 25 lakhs, okay, this is the price of the new machinery and it will be used for 5 years. It will be used for 5 years. So how should the company will finance it? So over here we will use the concept of match funding, clear? So what is this match funding? It's like we will borrow the money, okay, we should borrow the money for the same time period as the life of the asset, clear? So in this case, what is the life of the asset? 5 years, clear? And I will take the loan of 5 years. This way the machinery earns the revenue over 5 years, means machinery is giving you the revenue for 5 years, and simultaneously from this revenue you are paying the EMI of that machinery. So this is the revenue and this is the cost, remaining is your profit, clear? And the company pays back the loan gradually during the same 5 years, clear? And this approach is more safer and logical than taking a 1 year loan and then struggling to repay the money very quickly, because if you have suppose 5 years of life of the machinery and you repay the loan within 1 year, so it is very difficult for you to pay such a huge amount from your deep pocket, okay, then you have to cut down your other expenses. So it's better to take the loan of 5 years. Every year whatever this machinery is earning from you, from that component give the part of the EMI, clear? So this is much more safer and much more logical. Are you clear? Okay, so I presume that now you have understood the concept of going concern, match funding, clear, and both to maintain the business and to improve the efficiency, clear? Now coming to the second point, that is write down regulatory or compliance project. Regulatory or compliance project. Regulatory or compliance project. Now, sometimes what happens now, there are some projects which I don't want to do, but I have to do because of the compliance from the government, because of the compliance for the government. They are not just to make the profit, okay, but because of the rules or the law require it to do. Sometimes it has very minimum profit, sometimes it has no profit, but I have to do. Clear? Let's say the government passes a rule that all factories must reduce the pollution by 40%. Now for this I need to install a new waste treatment equipment worth of rupees 1 crore. Clear? Now will this equipment will generate me more sales? No. Clear? Can we skip this project? No. Clear? So what we will do in this situation, we will figure out the cheapest and the safest way to do it. Clear? Are you understanding the point? So it is something which we have to do because of the regulatory and compliance project. So now see, I have $100. Out of those $100, $40 will go to going concern project. $20 will go to the regulatory compliance. Now these two seems to be mandatory. Clear? Third is your expansion project. Expansion project. Now suppose you already only have say $60. So now do you have funds for expansion project? No, you will carry it forward to the next year. Clear? But these two are mandatory. You have to do it. You do not have any solution to that. Clear? You cannot move out from these two expenses. Clear? Now this expansion project, they are necessary for the company when you want to grow, when you want to make more revenues, you want to expand the customer base, you want to launch the new project. They are risky but rewarding as well. Clear? So they require the detailed analysis. Clear? So for this you require huge amount of funds in terms of marketing, in terms of product development, in terms of setting up the new machinery, new distribution system, so many things. Clear? So you will forecast the demand, you will analyze the cost, you will project the revenue. Clear? Something you cannot guess, but you need to make a detailed business plan. Clear? And with this detailed business plan, you will move ahead and you will decide on which project you are going to invest your money. Clear? Now the fourth point is new ventures. Okay, basically these are the other projects outside the company's core business. Means say I am teaching. Okay, this is my core business, but now I say that I want to run hotels because I see there is a huge profitability. Clear? So it's like a startup like decision. Means a mature company is now start entering into a new business like Tata's. Okay, they were mainly into the cars, they enter into the steel, they enter into the IT sector, they enter into the EV. Okay, now they are working on flying taxis. So these all are new startups, new projects. Clear? So the hierarchy is first going concern, second regulatory, third is your expansion. Means currently I am teaching CFA and FRM. Clear? So I'll spend on marketing, I'll spend on IT infrastructure to get a very good website, hire the very good engineers, hire few more teachers to solve the doubts. So these all are my expansion plans on the same product. But other projects, new ventures, these are outside the core business. I want to enter into the hotel industry, I want to enter into the travel industry. Clear? Because this is my favorite, or I want to enter into the clothing domain. Clear? So these all are new projects. Clear? For that we require the detailed financial and strategic analysis. Detailed means much more what we had done before. Are you clear with this? So we have completed all the 4 different types of capital investment. Let us revise. First, going concern, second, regulatory, third is the expansion, fourth is the new venture and the new projects. Clear? Now the second LOS is about the net present value IRR and this return on capital investment. So it's a separate topic what we have done over here. So I will put it into the another lecture. Okay. So this particular lecture I am ending here. Thank you.